Gilbert Carmona. I am the owner of Gilbert Carmona's Tax and Accounting Service, located at 113 Whitesides Road in Rutherfordton, just at the end of the street here, the same street that WCAB is on. I welcome you to call me today. This is a live program. You can call me at 828-289-9300, or you can also call the station here at 828-287-3356. During the next 30 minutes, you can call with any questions that you may have about taxes, any tax issues that you may be having right now. If you have received letters from the IRS, or if you have received letters from the state of North Carolina or any other state that you may have worked in or have had tax issues with, call me with those questions. I'll see if I can answer them live on the air. If I cannot, I'll try to get back to you in person, or I will answer the question live next week. Answering the telephones today will be my wife, Christine Carmona. Let her know your issues, your questions, and she will bring them to me. I don't have the capability here at the studio to put you live on the air. I would love to, but Christy will be more than happy to take your call. If you can just give her a little nutshell of the problem, specify if you have a letter from your taxing authority. You can maybe even read the part of the letter that addresses your problem. Most of these letters that you get from, especially the IRS in the state of North Carolina, South Carolina also will have a notice code. They'll have an issue like North Carolina will give you an ID number. If you can give her that ID number, that helps me identify generally what the topic is. IRS letters, most of them will say CP, like there's a CP 2000, a CP 0054. Be sure to give her that number. That number is very important in helping me. You can also email me at questions@gilberttalkstaxes.com, or you can just go to my website, gilberttalkstaxes.com, go to the Contact Us page, and just put in your question, your name, your reply email address, and hit send. That'll come right here to my laptop in the studios, and I'll be able to answer your question live. Let me tell you a little bit about myself. My name is Gilbert Carmona. My business is Gilbert Carmona's Tax and Accounting Service. We're a full-service tax and accounting and tax resolution service. My professional designation is I'm an enrolled agent. An enrolled agent, or an EA as we call ourselves, is a tax professional recognized by the United States federal government to represent taxpayers in dealing with the Internal Revenue Service. The profession has been regulated by Congress since 1884. There's only 43,000 of us right now enrolled with the IRS to represent taxpayers. So we're a very small, highly skilled, highly specialized group of individuals. An enrolled agent is authorized to advise and represent taxpayers before the IRS, the Internal Revenue Service, in appeals, collections, and audits. As an individual who is enrolled under the provisions of Treasury Circular 230, I follow strict ethics and continuing education standards. And this ensures that I give my clients a high level of professionalism and accuracy that is just not possible with the average accountant or the average tax preparer that is not enrolled. In one of my upcoming shows, I'd like to talk about what the IRS is doing to mandate that all tax return preparers will in some way or another be regulated. They'll be licensed. They'll be somehow they're going to go through some kind of a screening. Right now, anybody can prepare tax returns, and this has been a great disservice to the American people. Now that explanation I gave you, that's what the IRS writes about what an enrolled agent is. But let me give it to you in simple languages. In most circumstances, there are only 3 professionals that can represent you before the IRS. 1 is an attorney, 2 is a CPA, and 3 is an enrolled agent. Of these people, only an enrolled agent is a tax specialist. My examination and my licensing focused only on taxation. I graduated from Limestone College in Gaffney, South Carolina. I was a double major, graduated with a 4.0, summa cum laude. My majors were accounting and business management. I also have a minor in computer science. I'm also a North Carolina notary public, and I hold real estate brokerage licenses in North Carolina and South Carolina. Now, before I tell you about my program, this being the inaugural program, I'd like to tell you a little bit about what this program is going to be about, but I'd like to tell you what this program is not going to be about. This program is not about ways for you to avoid paying taxes. As Americans, we pay taxes, and we're known the world over as a compliant population that pays their taxes. As complicated as our tax code is, the IRS, the Internal Revenue Service, and the Department of the Treasury, they've made it fairly simple for us to comply with our debt obligation. I feel that my role as an enrolled agent, as an accountant, as a business consultant, is to help you to simplify even further and to help you comply with your tax liability. So this program is not about the anti-tax movement. There's a group of people out there that claim that the government has no right to tax you. There's another group out there known as the sovereign man movement, the no tax movement, and all these other ridiculous schemes. Most of the proponents and the organizers of those movements are sitting in jail right now. The bottom line is the IRS has the right to tax you. They have the law behind them, and they have the full force of the law. There's a judicial system in place that said it is legal and constitutional for them to tax you. As a matter of fact, recently when the Affordable Care Act, everyone knows it as Obamacare, went before the Supreme Court said that the Affordable Care Act was in fact constitutional because it was in fact a tax. And to quote the one judge, she said, taxation is constitutional. So what this program is about, it's to teach you, to empower you, to educate you with ways to deal with tax problems that you may have after the fact. When you get that letter from the IRS and you get that letter from NCDOR, the North Carolina Department of Revenue, or SCDOR, or any other taxing authority, what do? To teach you about potential tax problems you may have going into preparing your tax returns. I'd like to discuss some of the interesting history of taxation. And it actually is very interesting. We have not always had an income tax. That's actually a fairly recent development. I'd like to talk about how we got where we are and where exactly are we now. I'd like to discuss some of the laws that are pending right now. But most importantly, I want to discuss what you want me to discuss. So please call us here at the station, 828-287-3356, or you can call my phone, 828-289-9300, or you can log on to my website, gilberttalkstaxes.com, click on the Contact Us page, type in your question there, and hit send. It'll come right here. Let me know what kind of tax issues you want to hear about, what kind of tax problems you have, or just any general question that you have. Now, going forward, I'm speaking to some other professionals that I like to have as guests on the show. Actually talking to an estate attorney right now and discuss estate planning. We can talk about tax problems, but really I'd like to focus some on how to avoid tax problems. Estate planning, wills, while you're still in a position that you can make decisions on what to do with those. I'm also speaking with a bankruptcy attorney. Since 2008, bankruptcies have been a major issue. Anyone that's had debt forgiveness or has filed bankruptcy and has gotten a 1099-C from one of their previous debtors knows what a tax mess that can create. So I'm talking to a bankruptcy attorney, and we're hoping to have some schedules coming up for that. I've spoken with some real estate investors, some business consultants. What's important about taxation, and what's important to discuss about taxation, is that most, if not all, business decisions have a tax implication. In the 12 years I've been doing this, I've spoken with many businesses, And back in 2007, 2008, when a lot of businesses were going under and business mergers were happening more frequently than they are today, no business merger occurs before the full implication of the tax ramifications of that merger is discussed. If you put two entities together, there will be a tax. And how's that tax going to affect that business? So no business decision, really major or minor, happens without the tax ramifications being discussed. That's why it's so important to understand what the tax laws are. I told you that we were a tax-paying people. As a nation, we have a reputation the world over as being the most compliant when it comes to our tax responsibility, paying our taxes. Americans by far outperform the rest of the world. Part of that has been, even though as complicated as our tax code is, volumes and volumes and volumes of law, and then volumes and volumes and volumes of interpretation of that law, for the most part it's been easy. The IRS has made filing your taxes a simple process. In fact, it's estimated that 45 million tax returns were self-prepared and e-filed in 2013. Think about that. 45 million people self-prepared their own tax return. And that data came from efile.com, which they track historical and statistical data of e-filed tax returns. I don't have any current data on how many were mailed in. Estimates are anywhere from 3 to 5 million. So that's 50 million, potentially 50 million tax returns that were self-prepared. You need to be educated. You need to know what you're doing. The laws are changing. Most of the problems that I see are in that 50 million self-prepared tax returns. Now, I said that taxes and paying taxes is old. It's American. We do it. It's actually very old, and it's actually in the Bible. 3 times in the New Testament, Jesus himself said that we should give to Caesar what is Caesar's, and we should give to God what is God's. I want to educate taxpayers to know what their responsibility is and what they should give to Caesar. We'd like to take a quick break for a public service announcement. I've got some questions here, and I'll be right back. This is Gilbert Talks Taxes.
Listening to the radio, driving in your car. Radio gets results. Radio is there no matter where you are. Radio gets results. When you need to get your message through, people really do listen to you. Coming through loud and clear, no matter what you're telling, no matter what you're selling, everyone will hear. Radio gets results. Radio gets results. Radio gets results. Radio gets.
Serving the foothills of the Carolinas, this is WCAB Rutherfordton.
$2013, you still have it. So when you prepare this tax return, you'll be fine. Wait, I've got another question here. Hold on one second. Are we okay? Okay. Welcome back to WCAB. This is Gilbert Talks Taxes. I am Gilbert Carmona. Thank you very much. Helping me engineer today is Todd. Good morning to everybody. I've gotten several messages here during the break. One of the messages I got is the child tax credit, North Carolina. Are they still giving the child tax credit? The answer is no. North Carolina has totally revamped the schedules, and many of you employed or many of you employers know about the NC4 and the NC4EZ. I was going to actually talk about this a little bit later in the program, but since I've got this question, I've actually gotten many questions in the last few weeks about it. The nutshell of it is they've redone the schedules. They've done away with a lot of the credits. The child tax credit's one of them. They've done away with the small business tax credit, which for a lot of my clients, that was a big one. That absorbed made the first $25,000 of small business non-taxable, and then worked on from there. They've also eliminated dependents, so that everybody is now pretty much on an even keel with that, but they've also lowered the rates. A lot of the questions I'm having about this are very specific to individual taxpayers, so if you have any questions on that after the program, please call me, 828-289-9300, or you can go to my website, gilberttalkstaxes.com, hit the Contact Us page, type in your question and send it to me, and I'll get back to you. What they're saying is that overall, it's going to lower your tax, but I haven't seen enough of how that works yet. Some people that have actually gotten their first checks of the year I've gotten some mixed reviews. Some have paid a few dollars more, some have gotten back a few dollars more, talking about the North Carolina portion of it. So when you fill out your NC4 and your W4, which is the federal, the IRS equivalent of that form, and you put down your dependents, it's very important to note that you're using two separate forms, where on the federal form you may get, as an example, a single mom that works may be entitled to 3 or 4 dependents on the W4 when you go through the schedule. On the NC4, that same person would get 0. So just be aware of that when you're filling that out. If there is any message that I want to get across in this program, it is that if you have a problem, if you have a question, if there's something you don't understand, please get professional help. Do not ignore a letter from the IRS. Do not ignore a letter from North Carolina Department of Revenue. Do not ignore any letter from any taxing authority, and that includes local taxes. When most people think about taxes, they think about the federal government and the IRS, because that's the biggest impactor that we have on our lives and on our paycheck, with all the taxes involved there, Social Security, Medicare, and everything that we pay. But North Carolina actually has a pretty active Department of Revenue. Over and over, I see that what could have been resolved quickly and easily becomes a very large problem that costs a lot of money and cannot be solved easily because people waited too long. If you get a letter from the Internal Revenue Service, or if you get a letter from North Carolina Department of Revenue, or any state department, it is not going to go away by ignoring it. Their computers track these issues. Most of these letters have specific dates for you to respond by. And if you do not respond by these dates, it's a classic cause and effect. If you don't respond by the date, the computer will automatically escalate your problem to whatever the next tier is, depending on what the problem is. Most problems have a 1, 2, 3 strike and you're out scenario. If you do not respond by the second tier, it goes to the third tier. If you don't respond by the third tier, you're considered non-compliant. The problem now becomes fact, and it cannot be undone very easily. One example is the IRS will send you a letter called a CP 2000. It's a 90-day notice. We know it in the industry as a 90-day notice. It's the statutory notice of deficiency. It's a letter where they say, we've reviewed your tax return and we've determined that you owe another $500, $5,000, $50,000, whatever it is. They made that determination. They send that letter to you. You have 90 days to respond to that. If you do not respond within those 90 days, the matter can only be resolved in U.S. tax court. You've now made a problem that can be fairly easily addressed now into a problem that is going to cost a lot of money to address. You've lost all your appeal rights, and you've lost all other remedy that is available to you as a taxpayer. We will be talking about CP 2000. I'm sure many of the listeners that have tax problems involve the CP letters, and if you can share those with me, I'd love to share them with the listening audience. If you're starting a business, I would like to advise you to get professional help. If you are retiring, I really, really want to advise you to get professional help. The second point I really want to drive home with this program is do not let the internet become a substitute for professional help. And we hear this all the time, and when you go to websites, you'll see a disclaimer that the information on this website is not to be taken as for everybody. It's for informational purposes only. Please consult a professional. And everybody reads that disclaimer and then moves on and acts on what they read on that website as if it was fact. We all say, yeah, and move on. I've spoken to several people that work in government. I actually speak to the government every day in my job. I'm talking to one taxing authority or another during the day. And I have heard that it's been decided throughout government that while the internet was hoped to be a great source of information, it's actually become a great source of misinformation. I have spoken with government employees who are not allowed to go to certain websites for information because they're known for this giving misinformation, and they have to verify their sources. So if our government is telling that to their employees, how much more should we be listening to that advice? We're seeing situations time after time where articles in Wikipedia are wrong, dates are wrong, timelines are wrong, information is wrong, names are wrong. So what I tell you is verify, and speak with a professional. I give free consultations. Most professionals will at least have a one-time meeting with you to see what your problem is and give you a reasoned estimate of what it'll cost to fix your problem. I'm more than happy to do that. You can call me at 828-289-9300. You can go to my website, gilberttalkstaxes.com. I have the contact page. Send me your message. If it's more than we can just talk about over the phone, you can come into my office. You can also call WCAB at 287-3356. Even after this program, you can call here and leave a message for me. By the way, the program's going to be on every Saturday from 9 to 9:30, so please tune back next week. If I didn't get to your question today, I will try to address it next Saturday, and as I get questions and messages during the week, I will address them on the following Saturday. So one example of a story that I want to leave you with today, and this is an actual client of mine who did not consult a professional, and this story is really indicative of many of the clients that come to me. Her father died, and he left her an IRA. There were 3 siblings. There was a brother and 2 sisters involved. The father had some land. He had a car. He had some personal possessions, and he had this IRA. Now, there was a small will that pretty much gave basic guidelines of what he wanted done. So what the 3 siblings decided to do is they would split us all up among themselves. The house and the land were worth about $150,000, give or take. The IRA was worth $75,000. So they went to the internet. They Googled the question, are inheritances taxable? Well, an inheritance is not taxable until it goes over $5 million, and then an inheritance tax kicks in. So there is no inheritance tax. They went to several of these websites. There's no inheritance tax. Daddy didn't leave us anywhere near $5 million. We're good to go. So they decided to sell the possessions, sell the land, sell the house. The brother and the sister split the $150,000, and they gave my client Betty the IRA, which was worth $75,000. Betty said, no problem, I'll take care of it. She proceeded to cash the IRA. Well, let me say this. Google was right. Inheritances are not taxable until they go over $5 million. But the problem was they did not Google the right question. What they should have Googled was, is an inherited IRA taxable? And the answer is yes. Inherited IRAs have the same set of have a different set of rules for than the normal inheritance guidelines, and they have a different set of rules than normal IRAs, but they're very specific rules, and a professional could have advised them. The money has to be distributed within certain timelines and so forth. There's percentage ratios of how to distribute that money. What Betty did is she took all the money as a lump sum distribution. The person at the brokerage house that was the custodian for the IRA did make some comment to Betty about the tax implications of her taking out the complete $75,000, but Betty completely ignored it because Betty knew that there was no tax implication to her inherited IRA. But she was wrong. When she filed her taxes, she didn't claim that money. Sometime later, she got a letter from the IRS, which she threw in the garbage because the IRS must have made a mistake. After all, she knew that her inheritance was not taxable. She Googled it. The IRS should have known this. So she got another letter after that, and then she got another letter after that, and then she got the CP 2000, the Statutory Notice of Deficiency, which she put in the garbage also. 30 days passed by. Now she lost all appeal rights. So let me just get to the point of the story. Years later, the IRS finally caught up with her. By the time she came to me, she had been assessed the 10% penalty for early withdrawal of an IRA. Now, that IRA was $75,000. The 10% penalty was $7,500. She was hit with a 25% penalty for failure to file, 25% penalty for failure to pay, and let's not forget the 3% annual penalty for just having penalties. They ended up assessing her about $30,000 after making adjustments to taxable income. By the time she came to me, they had garnished her pension, they'd garnished her Social Security. Yes, the government can garnish your Social Security for past due taxes. A lot of people don't know that. They think these are sacred. They are not. And more taxing authorities are getting rights to tap into Social Security funds. They placed a lien on her house, placed a lien on her car, and they were ready to foreclose on her house. All of that because she did not get professional help. And the advice she got was the wrong advice. She acted on that, and it's cost her a lot. Now, I was able to help Betty and put her on a payment plan, and hopefully pretty soon she will have paid off her debt, but it has been years in the making. I want to help you all not to be in Betty's situation, and that's why I'm doing this program, and that's my heart, is to see you be compliant, yet be within the law, and give the government what they're due, but not a penny more. We're getting several questions here, and we are running out of time. I'm not going to be able to get them all. Next week, I'm going to be talking about taxation with representation. Hasn't been so great either. You can tell me when we're ready to sign off. I'd like to thank Northland Cable Channel 5. Those of you listening at www.wcab59.com. And those of you listening today, again, if you'd like to call me, 828-289-9300. Here at the station, 287-3356. Or my website, gilberttalkstaxes.com. All consultations are free. I'll try to answer your question the best I can. I'm actually getting several questions about the child, some more questions about the child tax credit. Real quick, I got a few seconds left. No, that child credit is not for 2013. For 2013, you're going to file normal. Everything with the NC4 is for 2014. So this year you're good to go, but next year is where you're going to see these changes. I'd like to thank you for listening. This is Gilbert Talks Taxes.